Welcome to JSR Voice. In this class, I want to discuss with you one problem and its solution on a topic that is income from capital gain. Already in the previous lectures, I discussed introduction part as well as few problems. Now I want to discuss with you one more problem under income from capital gains. Let us go into the discussion. Before going into the discussion, little bit introduction part which is helpful for doing solution. So let me discuss that in a few minutes. Actually, capital gain means if assessee is selling any asset, capital asset, then he gets either profit or loss. So if he gets any profit out of sale of capital asset, then we have to call that profit as capital gain. From the income tax point of view, that is one kind of income. So that is one head of income from capital gain. So we should calculate how much he actually is earning out of that sale of capital asset. So for calculation of income from capital gain, we have to classify the assets into two types, non-financial assets and financial assets, and we have been discussing about non-financial assets. Non-financial assets examples are land, buildings, plant and machinery, equipment, jewelry, gold ornaments. So here again you should know whether that capital gain is a long term capital gain or short term capital gain. How to decide one capital gain as long term or short term? We have to consider time period. So what kind of time period we have to consider? In case of non financial assets, let us discuss for land and buildings. For land and buildings, one period will be taken into account. For other assets, another time period will be taken into account. So what is the time period that we take for confirming whether that is a long term capital gain or short term capital gain in case of land and buildings? 2 years period will be taken into account. If assessee or if the asset is held by the assessee for less than 2 years period and then he is selling it off, then we have to call that capital gain as short term capital gain. If the asset is held by the assessee for more than 2 years period, then we have to call that capital gain as short term capital gain. Here he is actually having that asset and using that asset for more than 2 years period. Later on he is selling that. So out of that sale, whatever gain he gets, that is treated as long term capital gain. So 2 years period will be taken into account in case of land and buildings. And in case of other assets, what is the time period? So that is 3 years time period. Okay, 3 years time period will be taken into account. So if the asset is held by the assessee for less than 3 years period, we have to treat it as a short term capital gain. If the asset is held by the assessee for more than 3 years period, then we have to treat it as long term capital gain. Hope this is clear for everyone. You must know this before going into the discussion. So what is the format that we are going to follow for calculation of income from capital gain? So this is a format that we are going to follow one by one like this. Okay, you can have a look here. Okay, and for calculation of index to cost of acquisition, we are going to take this model 2, model 1 and model 2 formulas. Two models are there. So we are going to take these formulas for calculation of index to cost of acquisition. Okay, so this is about the introduction part that everyone must know before doing the solution. So if any clear information if you want regarding this introduction part, you can go to my channel JSR Voice and you can go to playlist. There you can select income from capital gain. There you will find the video introduction part as well as other problems and its solution videos. You can go through there. Okay, now let us go into the discussion of present question and its solution. So here our present question, that problem what we are going to discuss is this one. Let us discuss this now. So here okay. Sri Jayaprakash purchased sculpture. Okay, sculpture also is treated as capital asset. When he purchased that on 25th June 2001. Okay, for rupees 2,50,000 he purchased that sculpture in the year 2001, okay, in the month of June on 25th date for 2,50,000. So 2,50,000 is the original cost of the asset, and he is selling that asset for 11 lakhs. Okay, selling price is 11 lakhs, that is consideration received, and he is selling that during the previous year. That is why we are calculating capital gain, because during the previous year whatever happens, we are going to find out that gain or profit or loss on that, so that will be taxable in the assessment year. Okay, that is why we are calculating it now. Selling expenses are 10,800. Calculate capital gain in the following two situations. They have given two situations, situation 1, situation 2. So we have to do problem, the same problem under different two situations. What is situation 1 here? Situation 1 is if it is sold to Mr. Ravi Teja of Haryana state. So Sri Jayaprakash is selling that sculpture to Ravi Teja, another individual person. Okay, so if Jayaprakash is selling that sculpture to another individual person called Mr. Ravi Teja, then how we are going to calculate? That is what they are asking. And situation 2 is that if it is sold to Jawaharlal Nehru University, suppose if the same sculpture is sold to Jawaharlal Nehru University, Delhi, then how you are going to calculate? This is what they asked. We are going to do the same problem under two different situations. Let us go into that. First, let us take first situation. Now we are going to calculate this under first situation, students. Okay. Hope everyone understood question. So this is situation 1. Always you should draw columns, particulars, amount columns, and you should write computation of income from capital gain of Mr. Name of the assessee will be recorded here. So what is the name of the assessee here? Name of the assessee is Sri Jayaprakash. Okay, Sri Jayaprakash is the name of the assessee. Let us write here in this. After Mr. we will write Sri Jayaprakash. So Jayaprakash is the assessee, and we are going to calculate this for the assessment year 2024 and 25. So first we are going to draw columns like this. We are going to follow same format for all the problems under income from capital gains. If anything is not required, that we are going to delete, and same format we are going to follow. Particulars, amount. Okay, these are the columns that we are going to draw. Always first item is consideration received. Consideration received means sale price of the asset. So here you see, what is the sale price of the asset? 11 lakhs. Okay, so he is selling that sculpture for 11 lakhs rupees. So let us go and take that in the place of consideration received 11 lakhs. Okay, hope this is clear. And next we have to deduct selling expenses or transfer expenses from 11 lakhs. And they have given here in the question, selling expenses are how much my year? That is 10,800. So we are going to take this and we are going to record here in the format. Selling expenses 10,800. Yeah, that's all. And after that we should deduct 10,800 from 11 lakhs, students. You too deduct you can use calculators. 11 lakhs minus 10,800. So if you deduct, how much you will get? You will get 10 lakhs 89,200. Okay, this is the amount that you get, and you should name it as net consideration. Okay, always if we did after deducting selling expenses from consideration received, we should give name for the amount, that is net consideration. After that we are going to deduct either cost of acquisition or indexed cost of acquisition. Any one we are going to deduct. Then when to deduct the cost of acquisition? If our asset is short-term capital asset, then we are going to deduct the cost of acquisition. Cost of acquisition means original cost of the asset, means purchasing price of the asset. If suppose our asset is long term capital asset, then we are going to deduct indexed cost of acquisition. Okay, so hope this is clear. So let us see whether our asset is short term capital asset or long term capital asset. So when the asset was purchased in the year 2001 June. Okay, so 2001 to 2002 1 year, 2002 to 2003. Okay, that is second year. But if we calculate like that, uh, it will be it will become more number of years. Just look into the concept once. What is our previous year 2023 and 24? When the asset is purchased in the year 2001, we should see, this is not land and buildings, no, so we are going to take 3 years period. Okay, in case of land and buildings, to determine short term capital asset or long term capital asset, we are going to take into account 2 years period, but here we take it as 3 years period. So you just observe, he purchased in the year 2001, he sold in 2023 and 24, he used it for more than 3 years. Okay, after that he is selling. So if any asset is used for more than 3 years after purchasing, and if we sells that, then we have to call it as a long term capital asset. So here he purchased in 2001 year, he is selling it in 2023. Okay, so more than 3 years, so many years, after so many years he is selling, but we have to take into account 3 years period. So he is selling for more than 3 years only. That is why we have to treat it as long term capital asset. Okay, in case of long term capital asset, we are going to deduct indexed cost of acquisition. So I am going to delete this cost of acquisition. Hope everyone understood this. Okay, now we are going to deduct indexed cost of acquisition. Then do they give in the question indexed cost of acquisition? No, they don't give that. We have to calculate that. Okay, how to calculate that? We have to see the formulas. There are two formulas. What is that? If the first model one, you can see model one, students. If the asset is purchased by the assessee before 1-4-2001, but here our assessee is purchasing on 25th June 2001, means after 1-4-2001, after April 1st 2001 he is purchasing, okay, in the month of June 2001. So we can't take this formula. If any assessee is purchasing any asset before 1-4-2001, then we can take this model 1. Now we are not going to take model 1, students. Hope this is clear. And what is model 2? If the asset is purchased by the assessee after 1-4-2001. So now he purchased that asset in the month of June 2001, means after 1st April 2001. Then we can take second model. Okay. So first model I am going to delete here. Hope this is clear for everyone. I will delete first model completely because we are not going to take it. Okay, we are going to consider which one? Second model. Let us take second model only. Let us take second model, students, and here let us calculate it. So that is a formula, model 2. If the asset is purchased by the assessee after 1-4-2001. So what is the formula? Indexed cost of acquisition. Indexed cost of acquisition is equal to original cost of the asset. What is the original cost of the asset? He is purchasing that for 2,50,000. So let us take 2,50,000. Original cost of the asset 2,50,000 into previous year index. What is the previous year index number? That is They did not give here, but already you should know that. That is 348. Okay. Everyone know that. I told no in previous lectures also. Sometimes they give previous year index number. Okay. Sometimes they don't give. So we should know that. So previous year index number is 348 students. Okay. So to 2023 and 24 number, that is 348. Let us take that only now. I told in the previous lectures that we need not to remember every year index number, but 2 years index number everyone have to remember, because sometimes they may give in the question, they may not give. That is why those two numbers we should remember. What are those two numbers? Previous year index number. Okay, that is 2023 and 24 index number. What is that? 348. Remember that. And next one is 2001-2 year index number. So that is 100. Remember these two. So here they did not mention those two. We are going to take that. Okay. So what is our previous year index number? 348. 348 divided by index of the purchasing year. So in which year he purchased? In the year 2001, no? So 2001 index number is 100. You should know these two numbers. In this problem they did not give these two. Okay, sometimes they give, sometimes they don't give, but remaining all numbers they give, but only these two numbers sometimes they may miss it. That is why we have to remember. Okay. Yeah. So if you calculate this, how much we get? 2,50,000 into 348 divided by 100. So we get 8,70,000. 8,70,000 we get. That is indexed cost of acquisition. Let me write that. 8,70,000. Okay. So this is our indexed cost of acquisition. Let us go and record here. In the place of indexed cost of acquisition. 8,70,000. Okay. If you deduct that, how much you get from 10,89,200? If you deduct 8,70,000, you get 2,19,200. Okay, this much you get. And after that, if any additions are there for the asset, we should deduct indexed cost of improvement. But here for this sculpture there are no additions, so you can put nil. Otherwise you need not to write it completely also, but already I have written format, so I am putting it as nil. So you sometime if you want, you can write and you can put nil for that, otherwise dash. If you don't want to write, you can remove completely that one. Okay, whenever we have, then only you can write it, indexed cost of improvement. So I have written here, and if we deduct that, again we will get same amount, 2,19,200 only. So next, deductions under section 54 should be given, but here they did not give any information regarding deductions under section 54. So we are going to write it as nil again. Okay, again how much amount we are going to get? 2,19,200 only. So this is positive amount. Okay, so we are going to treat it as income from capital gain. This is how we do under situation 1. Okay, so this is situation 1. Under situation 1 we are going to do like this. Hope this is clear for everyone. And next we will do it under situation 2. But what is situation 2 here? Situation 2 is if it is sold to Jawaharlal Nehru University, Delhi. So here situation 2, here what the assessee is doing, assessee is selling that sculpture to one government university. So whenever assessee sells this painting, drawing, or any sculpture like that to any other government universities, then that sale is not treated as transfer. So we should not take that gain as profit on capital asset. Okay, we are not going to calculate that. So whenever any assessee, anyone sells sculpture, painting, drawings like that to any government university, we should not treat that sculpture or painting or drawing as capital asset. Okay, we need not to calculate capital gain for those assessees. So here same thing occurred, that is why we are not going to calculate that. So situation 2, I'm going to read that point, you can see that. Painting and drawing etc. are treated as capital asset, but sale to government, university, national museums is not considered as transfer. Actually, painting, drawing, all this can be treated as capital asset, but if that is sold to any government or a universities or national museums, then we can't treat it as transfer. Okay, so we need not to calculate profit on sale. Okay, so here assessee is selling to Jawaharlal Nehru University, so he is selling that sculpture to university, so it is not treated as sale. Okay, that is why we are not going to calculate. So this is the answer for situation 2. Hope this is clear for everyone. So let me show what we did now. Okay, I will show the question as well as solution what we did now once, so that you can see total solution in one time. Okay, so this is a question that I discussed with you. So this question I took from H. Premraj textbook, Pankaj Publications. Those who are following that, you can see this and you can listen the lecture also. So this is a solution part for situation 1. We are getting 2,19,200 as income from capital gain. Next, this is a calculation part. Here we calculated indexed cost of acquisition. We used model 2 formula. And this is situation 2 answer. Okay, so this is what we did in this class. Hope you all understood this. So scoring good marks is very important in income tax paper, because so many students feels that this paper is tough, but once you understand all the rules and regulations, formats, okay, then if you understand the lecture first of all, then you will be feeling that solution is very easy and you can score good marks in the final exams. Okay, so if you understand the class, like the video, share it and subscribe the channel. Thank you.